If you have a bookkeeper or controller, what should they be doing?
I would say starting, again, that WIP to me is the most important thing in construction accounting. I would say all small businesses are susceptible to fraud. The biggest thing is what we call segregation of duties. And it is a challenge for smaller businesses to segregate those duties. We do understand that a small business, you can't hire a whole accounting team. It may just be Barbara the bookkeeper, but with really good oversight and then taking away some of those major payments out, those things that have to do payments out will help.
The first thing we're going to do when we go into your company is we're going to say, what's the riskiest areas for you, right? And so for a contractor, it's usually revenue, accounts payable, right? Like job costing, the estimations that they're doing.
I've had clients where they have their password on a sticky every year.
On their monitor?
Yeah. Every year we give them a comment about that, and this has been in the past, and they have it think that trying to get good internal controls in place is key, because preventing it's so much easier.
Welcome, everybody, to the next episode of the Construction MF'ers podcast. I am Scott Peper, CEO and founder of Mobilization Funding, and today we are going to get into accounting. We're going to get into fraud. We're going to get into best practices, and I have two perfect people here to share their expertise. From Saltmarsh, Cleveland Gund, we have Stacie and Lisa. You guys may recognize both Stacie and Lisa. Stacie was an MF'er and still is, but was a proud MF'er. And Lisa taught an entire group here just a few months ago all about cash flow, accounting, best construction practices. So welcome, guys. And they came in for us.
Thank you for having us back, or having me back.
Yeah,
welcome.
I'm excited to be back.
Me too. So we got a lot of stuff to tackle. I think one of the coolest parts about what you guys do is you're very focused on construction clients, construction businesses. You've seen the evolution of small, medium to large size businesses. And one of the things I talk about endlessly, and we push is the difference between hiring a specialist in your accounting world, especially when you're in construction, because you can leverage all of your expertise. You've seen $1 million businesses grow to 20. You know what a $20 million business is doing versus a 50, a GC, electrical contractor, HVAC, plumber. I mean, they're all different, and there's different reports and information. So I'm really excited about showing some of this expertise today. But why don't you guys tell us just a little bit about the firm, yourselves individually, and why you're so passionate about sharing your knowledge.
Okay, so Saltmarsh, Cleveland Gund, we are a Florida-based firm. We've been around since 1944, so 80 years, yeah. But yeah, we are full service. We do audit, we do tax, we do accounting and advisory services, and then we also have a branch up in Nashville that does some healthcare stuff. Our Florida offices are in Pensacola, Tampa, and Orlando. Stacie and I both work mostly with the Tampa office in the audit and assurance department. As Scott mentioned, we are a construction focus firm. They're one of our biggest niches, and Stacie and I, a majority of our clients are construction. So I guess part of my passion with construction is I come from a construction family. So I love working with those construction clients. They're my favorite clients. I have other clients as well, but construction's definitely my favorite.
And now they know they're not your favorite, but that's okay. But Stacie, tell us a little bit about yourself. Why are you so passionate about construction?
Yeah, so I kind of fell into construction accounting through Saltmarsh, and I found out I loved it. I also have construction in my background in my family. I've got a bunch of different subs that work in my family that have kind of built these things from the ground up. So I really saw that. And so as I got into it, I just loved it, and I was really passionate. I mean, if you think about it, they're really the kind of foundations for our economy are the contractors. If you see a bunch of cranes out and about in town, you know that our economy's doing pretty well. the cranes start coming down, the funding's being pulled, and you can start making some plans otherwise there.
There's a lot of data that shows too, like for every construction job that's created, multiple other jobs are created in tangential businesses, whether it's retail, real estate, logistics, all kinds of material movement around. It's really the backbone of the society.
For sure.
To serve our country. So talk a little bit about quick. So we obviously have a lot of construction clients that follow us, watch us. Why is it so important to choose a firm like yours who specializes in construction when my sister is a CPA and just graduated, or she's a CPA and has been for 5 years? Why is it so? Why would you all be better than my own sister?
Well, that's a loaded question. As you mentioned at the beginning, there are a lot of nuances in construction accounting. Just the job schedule, following that through. Overhead is something that me and Jess that I work with, that we talked about at the cash flow workshop. Understanding overhead application and the different ways to apply overhead. Helping you get whatever you need for your bonding, for your lending. We can offer all of that, whether it's a comp review or an audit. And just with a review, Stacie and I were discussing earlier, all of the ratios that we help you with. So we can show you those ratios that your lender or your bonding agent's looking for, where you are, maybe how to get to where they want you to be. And then something that I talked about at the cash flow workshop was a gain fade analysis. And we do that with our audit and review clients. And that analysis helps you see where you had the job estimated, where it was last year, where it is now, and just showing you your trends and everything. So I think really understanding the underlying accounting of the construction industry is important, where some of our other colleagues who work in different industries like nonprofit or government or whatever, they don't have a strong understanding. So we have at Saltmarsh our assurance team and our tax team, where both of us are primarily in construction, and like the rest, like Jess is primarily in construction as well.
And so like a gain fade, is that like, for example, I bid this job and I had bid it at a 20% margin, and now it's supposed to take me 8 months to do. I'm now 3-4 months into it. Am I tracking at my 20% margin? Are my costs in line with what I had? Am I gaining more efficiency and therefore I'm going to increase profit, or am I losing that? And so like, is it another way to kind of phrase, it's the report card for how well you executed what you planned to do?
Exactly. That's exactly what it is. That's probably a better explanation. We use that's our accounting lingo.
Well, gain fade makes a ton of sense. I mean, you're either gaining ground on what you planned or you're fading. But I think a lot of times in a world of construction, even businesses that are multiple millions of dollars in revenue, they're very well executed, they're struggling to figure out how to grow, or they're struggling to figure out they're growing, but yet it still feels like they're not at all, and a lot of times when you do the analysis, it sucks. You realize you're not even making money, or you realize you're just breaking even though you're bidding and winning at a 20% margin, 25, 15, whatever it is. You're executing, actually somewhere you lose a cost, you lose an efficiency, there's some problem there.
Right.
That's kind of sucks when you find that out. It's worse when you don't, and then the problems spin out and you blame it like I didn't get paid correctly or I didn't get paid fast enough, but it's really two things. Maybe it's the slow payments, but it's also you're not executing to what you bid.
Well, and I think too, we see a lot of times with the contractors, right? They're great at what they do. We have this guy who's been in concrete his whole life, right? And he has really built this business to a couple $1 million by putting his nose to the ground and grinding it out, right? Dealing with fires as they come up. He's usually a one-man shop. maybe he gets some other people in there, right? But he's not ever thinking about the accounting side of things. He's not thinking about how that new equipment that he's buying is going to affect his overhead. He's not thinking about his gain fade when he's bidding projects. He's thinking he's putting the 30% margin in there, and he's going to get a good, profit out of it. But really, he's not considering overhead and all that. So then when he goes to get bonding, and he doesn't have a construction CPA to say like, hey, and walking him through all of these estimates, that's when we really come in handy, I think.
Yeah. It's interesting listening to you talk through that, and we've all been there with clients. I mean, we've been there ourselves in our business. Every project has its own nuance to it. The information, you can only make decisions based on the amount of information you have and the quality of it. So what is if you were going to equip a new client with the right information, the right reports to execute the work, bid the work, what are the key reports that you think are needed that you quickly try to put together for them? Meaning here's the information that you want to see, I want you to see so you can make the best decisions. And then in what format does that come in typically?
I would definitely say having an understanding of your overhead. What accounts you're applying to overhead at what rates. If you can have an understanding of your overhead, they know, these contractors know how much they're gonna use in materials, right? They know how much for their labor, almost to the dollar, off the top of their head. Sometimes they're brilliant, but if they need help with anything, it's really understanding that overhead rate, I think.
Yeah, that's where I see it a lot too. They aren't budgeting that in. They aren't even accounting for it sometimes during the year at year end. And then when everything comes to us and we're putting the overhead in there, they think they're making money, but they're actually losing money. So including that overhead in their bid definitely helps with their profit margins. But I think just having a good foundational WIP schedule also helps. And then they can look at, going back to the gain fade, if they're looking at the gains and fades, they can look at different types of jobs, different customers, different areas, and see historically what has this actually cost me? What do I actually need to bid based on historical? So I think a good foundation, but definitely putting that overhead in there.
What I think is fascinating, if I'm a construction contractor listening to this, and we talk to them all the time, but I'm thinking listening okay, I'm 10 minutes into this podcast. I'm waiting to hear some good stuff. I have my income statement. I have my balance sheet. I do my taxes. I have my project reports. Probably run my Gantt charts. Focused on estimating. Focused on bidding. They just said gain fade and a report analysis of my true overhead cost, which will determine whether I'm profitable or not. I bet you there's a lot of contractors listening to that said, shit, I don't have either one of those reports. And that boils down to why it's so critical to get with a construction group that does your accounting, because the first two reports you're going to give them before you give anything else is going to be an analysis of your overhead and a gain fade analysis, which is a report card of your execution on a project, so that they can start making decisions before you even talk about an income statement or a balance sheet, which most people think is the most critical thing on the earth, which it is, but not before those things. Your third report was a WIP schedule. And we still haven't talked about an income statement or a balance sheet. And we haven't even talked about a cash flow report yet. So it's just, I want to hammer that point home, because we didn't rehearse this at all, by the way. And it's not even a question right now.
I didn't know we were going to talk about this.
But I think it's really critical, because I was curious of what you guys would say. And I want folks that are listening to this to really grasp onto that. And the cash flow is the most important thing, whether you're executing to that, your gain fade, and then when it comes to bonding now we can start talking about proper accounting for your income statement and your balance sheet, which will be critical. But if you don't have a handle on those other 3 or 4 pieces coming in, then you're kind of stuck even getting to the income statement balance sheet. You can't do anything with it if it's already there. So let's talk about, how do you properly prepare internally? So now you're inside a construction company and you have a bookkeeper, or maybe you have a controller, right? You may or may not need a CFO, depends on the size. Maybe you have an interim CFO. What do you guys see as the best structure for how to work with you all what the right process is? I'm like, if you have a bookkeeper or controller, what should they be doing?
I would say starting, again, that WIP to me is the most important thing in construction accounting. So if
To explain what a WIP report looks like, if people don't really know what I'm talking about, basically what we're used to seeing is each job that the contractor has going on listed out by job name, maybe a job number, maybe the customer, whatever information you want to have in there to differentiate between the jobs. And then it's going to have, and I'll be kind of basic here because it can be very in-depth, but it's going to have your contract value. So how much is that contract? We usually have change orders also in there, and then the total contract with your change orders. Then we have your budgeted expenses, and then it'll be your budgeted gross profit and a gross profit percentage. And then the WIP will also show you your closed contracts. So they're totally done. And then your open contracts, they're still going on. And then it'll show your actual costs, your actual billings, and then your actual revenue earned. Because your revenue is not your billings, your revenue is based on your percent complete. So it would be your total costs incurred over your budgeted costs. And that's going to be your percent complete. And then that percent complete, multiply that by your contract value, and then that's your revenue earned. And then also in there are what's called underbillings. So it's based on, so if you have earned $1 million, but you've only billed $750,000, then you have underbillings of $250,000. Other way around, if you have earned $750,000 and you billed $1 million, you have overbillings of $250,000. Anyway, so that shows all of that information, and that is how we get your income statement and balance sheet, is from those numbers. At the totals at the end are going to show us what should go into your income statement, your balance sheet, as far as your expenses incurred, your revenue earned, and then your over and under billings go on the balance sheet. Okay, so that's what your WIP schedule looks like. So from your bookkeeper, or your accountant, controller, CFO, I would expect them to be entering the billings into whatever accounting software they're using, entering the expenses into whatever accounting software they're using, and then translating those onto the WIP. Because most of the clients we deal with, they are using QuickBooks, and then they maintain their WIP on an Excel spreadsheet. There's some more sophisticated accounting softwares that your WIP ties out to your accounting system, and it fills it all out for you. Those are a little more expensive, and QuickBooks will do the job, and you can do everything in Excel. But that's basically what a WIP looks like. And then at the end of the month, what I would suggest that your controller, accountant, or whoever is running your books does is those totals at the end, make sure the revenue ties out to the revenue in your QuickBooks, make sure the expenses tie out, make sure your over and under billings tie out. A lot of times there's adjustments that need to be posted by your accountant to make those all tie out. Overhead is typically included in the WIP schedule. A lot of times when we get the WIP, like sometimes our clients have it in there, sometimes they don't have it in there. I would advise them to put it in there, because then they're going to actually see where they are. And that WIP will also be, it should be, if you have it set it up, to show your percent complete. And then you can look at your total expenses versus your budgeted expenses and see what your percent complete is based on that. And this is a place where you can see where jobs are starting to go off the rails. So your expenses incurred are 75%, but you're only 50% done actually with the job. So like, what's going on? You're probably not going to make those margins if you're only 50% actually done.
So do you have the ability, or do you all provide like templates for a proper WIP? templates for a profit overhead calculation. So like maybe the controller's sitting there listening like, oh man, I'm not doing any of that. Oh no, but I also don't know how, which is fine. It's okay. And candidly, I don't necessarily know if a controller or a bookkeeper needs to know how to do all those things. They just need to be able to tap into the CPA who can provide the structure for them, and then they can execute on the structure. So I think it's perfectly acceptable to not know that. As a matter of fact, it's just, you just need to be able to execute what you're doing. So that's something quickly you guys can provide. Here's a template for your WIP. Here's a template for your overhead. Follow this. When these transactions come through, this is how you build your general ledger. This is how you're going to process and post these different things. And then you all can do what you do and work back and forth. So what do you think is the main obstacle why folks don't do that? What prevents someone from doing that if it sounds so simple as I say it out loud?
I think
Me anyway.
I think too, just like knowledge of, like you're saying, getting started. Sure, we could give you a template, but it's really even simpler to get started. I mean, if you're on QuickBooks, if you just print out the profit and loss by job. So we are seeing a lot of the contractors, especially if they're using QuickBooks, they're tying expenses to jobs, right? Like they're tracking their revenue and their expenses by jobs, but they just don't know how to then turn that into a usable report. So that report is really going to drive your WIP, because the WIP is driven by the percentage of completion. So if you have a good budget for your job and then you have the profit and loss by job, you can get started today with no help from a CPA. Where we come in handy is like Lisa said, I almost called you Lori. Like Lisa said, is helping identify those ratios and stuff, and looking at them, because again, you can build a WIP and then you're saying, well, now where do I go? How do I interpret this now?
We do have a template though that we've provided some clients. Some clients use it and it's nice. Some clients don't use it, and we take their information, put it into our template. But basically, there's places where you hard key things, and then there's formulas that calculate things. So it calculates your over billings, calculates your under billings, calculates your percent complete, all of that. And I love our template that we use.
Do you have a good template with instructions that maybe like we could share with folks?
For sure.
Okay, we'll add that. We'll put that in with the show notes, a way to get that and download it. Okay. Let me change topics for you guys on a little bit. Fraud is a big topic. People are in trouble with fraud. We see trouble with fraud. I think construction companies are often targeted. A lot of industries are, but construction certainly isn't. What's the Barb with it for?
Immune?
Immune, yeah. I'm gonna go back. Pause. So construction certainly isn't immune to that. What do you guys suggest? How can you help protect against fraud? See it, check it in advance, help put systems in place, or is that something you all can do?
For sure. I would say all small businesses are susceptible to fraud. The biggest thing is what we call segregation of duties. And it is a challenge for smaller businesses to segregate those duties, because typically they have Barbara the bookkeeper that has been there forever, and she holds all the keys to the kingdom. So
every single one.
Everything.
Even the ones nobody knows about.
So she's, receiving the checks, recording the checks, depositing the checks, reconciling the bank statement. And then she's also cutting checks, receiving invoices, entering invoices, also, again, reconciling the bank statements. So there's a lot of things that you can do to segregate those duties. And, with small businesses, and especially construction, the owners, she's concerned about building things. They're not concerned about accounting. And they don't have to get super involved in it, but there are things that they can do to help segregate some of those duties, even if they only have a Barbara, the bookkeeper. Reviewing source documents is a big thing as well. So really reviewing the bank statements and the reconciliations, but going through those bank statements, especially for the disbursements and the checks written, like, do I recognize these vendors? Did I authorize this? Another big thing is the owner maintaining the check stock. So if they hold the check stock, then no one else can, and makes it harder to write checks. And so that's a really easy thing that they can do to keep from payments from going out that they're not authorizing. Because even if they're the only ones allowed to sign the checks, if someone else has the check stock, they can still forge the signature. So that's a big thing. And then if you have ACH payments going out, so if you make electronic payments, something called, what's it called? Positive pay.
Oh, yeah.
So positive pay. So if there's you can set it to a limit or everything. If, Barbara the bookkeeper's initiating an ACH out to ABC company, the bank's gonna notify the owner and have them approve it. But those are, segregation of duties is the biggest thing. And we do understand that a small business, you can't hire a whole accounting team. It may just be Barbara the bookkeeper, but with really good oversight and then taking away some of those major payments out, those things that have to do payments out will help.
One of the things we've seen a lot happen inside those businesses is the fraud, or even internally, or an accident, right? You can get external fraud and people make mistakes. That's one thing. I think a lot of folks are aware of that. But we had a client that just had, their closest person, for all intents and purposes, think of a chief of staff, COO, and was siphoning lots of money out of there in all different ways. Expenses attached to payroll, extra payroll, bonuses. There's just so many ways that was like drip, 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 and over when you look back, it was years in place. And one of the things I really suggest to folks sometimes is just, even if you have your outside accounting firm, review your financials monthly. One, I don't know how to run a business without kind of getting your monthly report card. To me, that's kind of basic. But if you don't want to do that, another reason to is if you have your accounting firm execute a system, implement it, your team's following it, and then they're reviewing it every month, y'all are going to catch things that just don't make sense. Hey, Scott, why is payroll an extra $10,000 this month than it wasn't? It's not a 3 payroll cycle month. It's not a 5-week month. It catches that. When meanwhile you're running, like you said, you're on the field, you're in the business, you're jamming. You're not going to catch little things like that. And so, any one thing like you guys catch like that more than would pay for the monthly services to handle that. And so I always suggest there's good ways to use third parties. Even if you say, I only have this controller, I can't tell Barbara to segregate duties. Then use your outside service to do that. Is that just something I'm thinking of, or do you hear clients say this helps me too, or is that a good reason?
Our accounting services department, they can sometimes fill those segregation of duties holes to help with that. And then I think outsourcing your payroll also helps to a professional payroll company, because then they're tracking it and they know the payroll cycle, and so you're not worried about someone else cutting payroll checks. And then you just reminded me, like, ghost employees are another thing.
I was going to ask you about that. Yeah.
So that's another form of fraud that happens, and that's when the owner's not involved in the payroll process, and they're not reviewing like time cards or payroll reports or anything. It's just going out. So Barbara the bookkeeper has all the keys to the kingdom. She enters her husband as an employee and starts paying her husband, and since you're not reviewing any of that, you're never going to catch it. And it may be just a couple $1,000s a month, and if you have a $50,000 payroll a month, you're probably not going to notice $2,000. So I think a payroll company is a really good way to mitigate that risk, because then you can set up your controls to where you're having to approve any employees added. You're having to approve what their payroll is, or any pay raises or promotions or anything. And then if you don't go with the outside payroll company, just really, really reviewing those payroll reports to see where's the money going, who am I paying, what am I paying them, does it make sense? So just being a little bit more involved, or you can outsource it as well to help.
And just to touch on like how a third party would help. So the auditors, we obviously are looking at the end of the year and comparing those, but like Lisa said, our accounting services can either be involved in like day to day where we're entering things daily, or we can kind of do like that CFO kind of position where we're coming in at the end of the month, generating these reports, running over these ratios and kind of saying, hey, this doesn't make sense. And so that's a really good option for some of our clients that just have no interest or don't have any time to be super involved in the accounting side of things, but they do want to offload some of those duties off of Barbara and onto, somewhere else.
How do you guys see these same things happening? Sorry, I think I kicked you. But how do you see these things kicking over when it comes to like vendor payments, paying subs, suppliers? I assume there's fraud littered in there as well, but also is it same systems, just new just for this vendor outside management, or is there something changed there different?
So there's a concern that Barbara, the bookkeeper, could be colluding with those vendors, and so they'll put a little bit more on there, and then it's getting kicked back to her. A little bit more is getting kicked back to her because she's allowing it to go through. So that's one concern. The other concern is just vendors just adding stuff in there and hoping you won't check it because you're busy running your business. And
Sort of seems in line.
And yeah, that seems reasonable. So,
Or ghost vendors too. And so that's where like really we're thinking about what the source documents are. So like, first of all, risk management, right? Like risk assessment. The first thing we're going to do when we go into your company is we're going to say, what's the riskiest areas for you, right? And so for a contractor, it's usually revenue, accounts payable, right? Like job costing, the estimations that they're doing. So then putting processes around those. So employees, like getting an outside vendor, to do your employees, but then having a process around it where, Barbara, the bookkeeper, isn't opening the bank statement, like you're actually the one that's opening the bank statement. Maybe once a quarter you go through and actually look at the vendor list from QuickBooks and you print it out and see what the amounts are, right? Because that's important too. Like, maybe somebody's trying to get it just under your, threshold or something. So just going back to those source documents and making sure that you're the one reviewing them, either on a monthly or a quarterly basis.
Yeah. We see a lot of supplier vendor. I don't want to say fraud, but I feel like it is fraud, but it might be an employee of the business owner. And we'll call the check on a wire, or we're calling the check on information, and they either don't exist or the emails are the same as some other one. I'm like, that's weird. There's just a lot. I think it happens a lot more than folks think. And so I think it's important to talk about. And it's just, again, another way to catch some of those things.
yeah, although can be a little more work, purchase orders are also a good thing to use. And that way you're writing up the purchase order. So we are ordering X, this, and it's this many at this dollar value. So this is what the invoice should be for. So if you have a purchase order and you're comparing it to the actual invoice, that's another check. And then if it's way off, you can, go back to the vendor or go to the employee that received it and find out why it's off. And maybe they did overcharge you, or maybe they sent more. That's another way to help mitigate that risk. But like Stacie said, having a good vendor listing and reviewing that, that's another thing. The risk there is the ghost vendors is creating a vendor that's like similar to a vendor that you pay all the time. So Mobilization Funding Inc. So I do Mobile Fund LLC or something, and create this company, and it looks like somebody that I pay. So, oh yeah, that looks good. But Barbara, the bookkeeper, has created this vendor, and it's all going to her.
What about cybersecurity? Do you see anything that people should be doing? At what point should they worry about it? What size company?
I would say they should always worry about it, especially if you're doing any sort of like DOT work or anything like that. At the minimum, having an IT company come in and again assessing your risk and where you're vulnerable. But two, then teaching your employees, right? Barbara, the bookkeeper, might be in her 70s. She might know that that guy from Nigeria isn't going to pay out once she deposits this check into his account, So just training your employees and saying like, hey, I know we have yearly training where we have to watch a video and that talks about cybersecurity. I know we have an outsourced that IT department that basically I think it's like 10 or more computers they'll work with. So if you have around 10 people,
It's worth it.
right.
Yeah, I would definitely contract with some sort of IT specialist to help in that area. At a minimum, VPNs are a good thing to have. Passwords, making your employees change their passwords every 90 days or whatever, and not sharing those passwords. I've had clients where they have their password on a sticky every year. Every year we give them a comment about that, and this has been in the past and they haven't changed it. But passwords, it's such an easy thing, and it really helps prevent, I guess, a lot.
So if a business owner calls you and suspects fraud, whether vendor, employee, ghost employee, whatever it might be, or an employee that they think might steal, what do you suggest they do first?
I would say wherever you suspect it, if you have the ability to start investigating it, start investigating it. And if you have the ability to lock down any type of access the employee has, or with vendors it's a little bit harder, stop paying them until you get to the bottom of it. That would be what I would first suggest, is look into it further and cut off any type of, stop the bleeding, if possible. The next thing I would recommend is, if you do find something, then reach out to a good forensic accountant and it's worth having them look into it, and then it goes to trial, and then they have their report and can help, get you your money back, or at least put them in jail.
I mean, it's funny you bring this up, because I was just at the dentist, and my dentist was talking to me about, they just had the front desk person stole like $75,000 from them. They have no idea, like this sort of dribs and drabs here and there over a 4-month period, and they, it's hard to find employees that hire new people, and next thing you know, they have $75,000 stolen from them. And I'm like, geez, it's like brutal, Here you're like, it's a dental office, but it could easily just happen just in any front office of any construction company. Man, so what questions did I not ask you guys that we should talk about before I get to what my favorite round here is, which I call the rapid fire questions?
I think we hit on all of it.
I think we did, and I would say, to your point with the dentist, it's so much easier to prevent it from happening than to stop it. And even if you do stop it, sometimes it's hard to recoup those funds. So trying to get good internal controls in place is key, because preventing it's so much easier.
And I'm pretty sure $75,000 could go a long way towards accounting services for more than a few years, probably.
Sure.
So now you're getting the benefits of all the accounting services, you're capturing some fraud, you're preventing it. I mean, it's probably worth it, back to our point. All right, I want to ask you guys 3 questions, and I want you to answer the first thought that comes to your mind. All right? What's the best advice you've ever received?
Manage your own career, because no one else is going to do it for you.
That's good advice.
I would say act like you're not replaceable, but remember you are. So show up every day like you're just going to kill it and work super hard, but remember that at the end of the day, everyone is replaceable. And so, making sure that you're putting your best foot forward.
I think putting your best foot forward is good advice. I don't know if everybody's replaceable. I think I've heard people argue both those. I've heard that, and I would have told you that I agree with you on that. Because it's real. At the end of the day, it is true. But there are some people that do not believe that, believe it or not. And when I said it one time, someone was like, "Did believe it?" And I was like, "Oh, they made some really good points." So I always second guess myself about talking about that again. But it made me think of that. So it's that person who they know where it is. I didn't say that, Stacie did. But what's your favorite business book?
Getting Naked by Patrick Lencioni.
Oh, I love Patrick Lencioni, and I didn't even know that he wrote a book called Getting Naked.
Yes.
What's that about?
So it's about being vulnerable with your clients.
Solid advice.
It's about being genuine.
He writes excellent books. I would recommend anyone read anything you can from Patrick Lencioni, especially if you're in business.
Yeah.
I've passed out a few of his books here, like 4 or 5 of them actually, but I'll run that way.
I don't think so, but it reads like a story.
Yeah, it's great. They're all fables with great lessons. Yeah,
I loved it. It's not like how to, but
and they're tasty reads.
they are.
Yeah.
Very short.
I'm a big fan of that.
Yeah.
Mine is actually Patrick Lencioni as well. It's the Ideal Team Player. I love the hungry, humble, smart. I tell people all the time, like, I will work with you if you are those 3 things. Like, if you're not smart, I'm gonna get a little frustrated. Like, if you're not humble, I'm gonna be like, if you're not hungry, like, we're just not gonna run in the same lanes. Mm-hmm. So you have to really have a good mixture of all 3 of those things. So I love that book.
What do you think is the most underrated skill to possess in the industry?
In construction or in accounting?
Well, it's good. I was thinking accounting, but maybe you answer both.
Okay. I think in construction, having a good estimator is underrated.
What about accounting?
Get back to me on that.
Okay. Fair.
I'd say, like, in business in general, just like remembering that accounting is the love language of business, right? Like, it really is. Like, it, if you can understand your statements and how they flow, you can understand where your money is going and how you should spend it, right? So I think that a lot of business owners kind of miss that in the shuffle because they want to be good at their trade and they're like, oh, that's just accounting. I'd say in accounting, I think the most underrated is like being able to figure it out, right? Because if you think about it, something new comes down the pipeline. There's no one telling our firm, this is how you do it. Our firm is going and they're figuring it out. So we're a firm of figure-outables.
I like that. I can't remember the woman who wrote a book, but she said it's all figure-outable. I can't remember her name, but it was really good. She's a great speaker. Maybe we'll find it and put it in the show notes.
Oh, yeah. I would love to read that.
Just thought of mine. Okay. And it's a hard one for me, and especially in audit. So being able to see the big picture. I'm very detail oriented, and a lot of accountants are detail oriented. Stacie, she's very good at big picture. Our fearless leader, Suzanne, is very good at big picture. It's a struggle for me. So I feel that's definitely underrated.
Well, the first thing I would tell you to do to fix that is start telling yourself that it's not a struggle. And you just have a couple things you want to pick up, and then you'll be surprised. You'll eventually be just like Stacie and be three-dimensional thinker and free thinker and big picture. I really appreciate you guys coming in, both of you, Stacie and Lisa. Thank you very much.
Thank you for having us.
Well, everybody, I hope you got the same benefits that we hoped you would receive. We've learned and talked about a ton here. We'll put all of everyone's contacts in the show notes. If you found any benefit to these items, please share the show, pass along a good word, connect with all of us on LinkedIn. We're all there as well. And in the meantime, I hope you all have a great week, and God bless you.